Our next witness is Grace Marie Turner. Ms. Turner is president of the Galen Institute, a public policy research organization that she founded in 1995 to promote free market ideas for health reform. Earlier in her career, she was executive director of the National Commission of on Economic Growth and Tax Reform, and served as president of Arnett and Company, a health policy analysis and consulting firm. Welcome. You have 5 minutes to present your testimony, Ms. Turner.
Thank you, Chairman Kaufman. Thank you for holding this hearing. Thank you, Ranking Member Schrader, Congressman Bartlett, West, Landry, and Tipton for this hearing today. I think it's tremendously important to look at the impact of this otherwise obscure and complex regulation on the real world of health agents, health costs, businesses, and job creation. The Affordable Care Act already is leading to a loss of affordable options in health insurance for small employers. It's leading to a loss of jobs inside and outside the health sector and to higher health care costs that make hiring workers more difficult, especially for struggling small businesses. Large employers can self-insure and better insulate themselves from the early changes inflicted by the health law, but not so small businesses. They're more exposed to changes in the marketplace. And as I document in my testimony, many carriers already are leaving the market for individual and small group insurance. When fewer carriers offer insurance and when fewer options are available for coverage, small businesses are hit first and hardest. The percentage of small businesses offering health insurance has declined from 68% in the year 2000 to 59% in 2011. The health law that so many small businesses had hoped would benefit them by lowering costs is instead harming their ability to continue to offer health insurance at all, at least partly because of early provisions in PPACA. Premiums in the job-based health insurance market rose in 2011 by an average of 9%. By $1,300 a year for a family to $15,000 a year for a policy. The medical loss ratio, which mandates that health insurance carriers spend most of their money on premiums, is contributing to dislocations in the small group and individual market. A growing number of carriers are leaving these markets because of HHS inflexibility in interpreting the law. One of the tools that small businesses have found to be most valuable in helping them to afford affordable coverage has been high deductible health care costs have been are likely to be an early casualty of the MLR rules. They discriminate against these high deductible plans because the MLR regulations only count payments made directly by insurers as medical expenses. That means that if an individual pays for a health care service to meet the deductible, the expenditure doesn't count toward the MLR, even though the full amount is actually a payment for medical services. So it's an interpretation by HHS that is going to particularly disadvantage the high deductible health savings accounts and other account-based plans that health insurers and small businesses have found to be most affordable. Companies that sell policies in the individual and small group market also have higher marketing costs and higher customer service expenses because they provide services, because they have to sell the policies one-on-one, and because they are really helping their clients to find the most affordable policies that they can with the resources they have. One of the perverse effects of the MLR rules likely will be higher health care costs, not only because they are shoving out competition and giving carriers fewer options, giving the remaining carriers the opportunity to increase their health care costs, but also because, again, of the HHS interpretation of the laws, which, for example, say that costs in ferreting out fraud have to be considered in the administrative costs rather than as part of the overall cost or excluded from the total. The medical loss ratios also are job killers, as really is this whole law. The President of the Federal Reserve Board of Atlanta recently said, "We frequently heard strong comments to the effect that my company won't hire a single additional worker until we know what health insurance costs are going to be." And as we have heard, the first line of impact is in the broker community, where a survey found that at least 21% of independent brokers already have been forced to downsize their businesses or even close their doors. As you mentioned, Mr. Chairman, the National Association of Insurance Commissioners has adopted a resolution urging Congress to amend the federal health law to protect broker commissions from the medical loss ratio so that they can continue to provide the valuable services that they do. In conclusion, one of the most fervent promises that President Obama made to the American people when this law was ramping up toward passage: if you like your health plan, you can keep your health plan, period. No one will take it away, no matter what. Clearly, before the law even takes effect, we find that's not true. I detail in my testimony many states in which carriers are already leaving the market that will impact small businesses first, because the small group and individual market are particularly difficult for carriers to meet this new test. As people are having their carriage disrupted, violating the promise that President Obama made, I am sure that the American people are going to look for other options, and I look forward to working with you and other members of the committee to achieve the real goals of health reform.